the numbers are always interesting in reporting season, but the commentary and the trends that come out of it are generally, really good indicators of, I guess, what's happening longer term in the economy. And I think there's probably no greater story for me coming out of this reporting season than the questions around the future of coal in Australia. Australia, traditionally a land that loves a bit of coal.
Loves it.
Digging it up, burning it.
Yeah, sending it overseas.
But I think serious questions are being asked to the point where one of these companies' CEOs, AGL's CEO, has asked for a transition plan out of coal from the government.
Pretty amazing.
Yeah.
But we'll get to that. So let's start at the top. Start with AGL. For those of you who don't know, AGL operates two major coal power stations. One up in the Hunter Valley and the other one down in Latrobe Valley. And Origin operates Australia's largest coal-fired power station, supplying New South Wales with about 25% of its power. So pretty significant.
Yeah, and the last few years, but this year especially, has not been a fun time to be a energy producer in Australia. Incredibly volatile electricity markets, and the flood of cheap renewables, especially solar and wind, has made traditional forms of generation, but especially coal, pretty uneconomical.
Yeah. So let's start with AGL, Ren. They've split their businesses.
They have. This was announced earlier this year.
Yeah, nothing new, but worth starting with.
Yeah, I think this puts, so AGL, Australia's oldest energy generator, I'm pretty sure, about 180 years old. It's been around a while.
Still going.
So this is a big call, but this would be close to its toughest year.
Wow.
It's probably had some tough ones over its time.
Yeah.
But this was tough. So sensing the writing on the wall, AGL announced they were going to split their business into AGL Australia, which was their electricity retailing business and all their clean energy assets. And then
I was going to say, by retail, you mean selling essentially product to you and me.
You move house,
everyone.
you need to sign up with an electricity provider, AGL.
Yeah.
And then Accel Energy, which is all their coal-fired assets.
Yeah. Interestingly, though, not long after that split, the CEO decides to resign. Yeah.
It's never a good sign when a business leader announces a major corporate restructure
and then leaves.
So
it hasn't been great. It's been tough, as you said, maybe the toughest year for AGL, but the last 4 years particularly have been tough. They have lost 3/4 of their value.
Yeah, down about 75% in the last 4 years. Not a good time to be an AGL shareholder.
No.
Well, any time in the last 4 years.
Yeah. So a few numbers. Revenue down 10%, 10.9 billion. Loss after tax of just over 2 billion, which is down a staggering 304%. And the dividend also got cut by 33%. And on top of all of that, the guidance is also not looking good for next year. They're expecting 37 to 59% drop in underlying profit. So the pain continues.
Yeah, and the energy retail business that AGL runs remains strong. They added 254,000 services and remain the largest multi-product energy retailer in Australia. So I think you can see the strategy there in splitting off the growth parts of their business, the clean energy assets and the retail business, and then putting the, I guess, legacy, soon to be decommissioned assets in its own corporate structure.
Yeah.